Welcome to the X Factor Real Estate Podcast, where we are simplifying the world of real estate one podcast at a time. I'm your host, Teri Hudson. Let's get into it. Welcome to the podcast. Thanks for being here. I am Teri Hudson, principal broker of X Factor Real Estate, and I'm super excited about this episode. So my guests today, my favorite human in the world, and also John Carter. Just kidding, John. I love you too. So Kris Hudson happens to be my husband, and I'm very excited to have him on, and John as well. They both are realtors that are agents at X Factor Real Estate, and their expertise is appraisals as well. So both John and Kris were appraisers before they became real estate agents. So I wanted to bring them on to talk about their specialty in knowing value and what adds value. A lot of times I get questions in real estate about what somebody adds to their home and how much value that adds. So that's all going to be part of our conversation today. But because the podcast is geared specifically for consumers in the marketplace, I want to really break it down and simplify things so that you guys all understand the need for an appraisal, who needs one, who doesn't, how that process works. So before we jump into it, though, John, do you want to just introduce yourself for a second?
Yeah, and first of all, I'd like to everyone to know that Kris is in my top 1,000 favorite people. So he made the top 1,000 this year.
Thanks, John.
I've been appraising since '98. Started and got my agent's license in probably 2005 or '6. Didn't do a lot of real estate at the beginning, but slowly morphed into doing more. So, but I've always been appraising the whole time.
And don't you think it's helps you substantially to have an appraisal background as an agent?
Yeah, I think it helps a ton. And I've realized it's a real benefit for consumers to have that background and not just the agent part. Not that you can't just have an agent, but understanding that your house is your biggest worth, most likely. So it's important to know the value of it and what really adds value and what really doesn't.
Yeah.
What do you say, Kris?
Would you like to introduce yourself, honey?
Thanks. Thanks, John. You're in my top 10.
Top
Yes. I've been appraising since '96. Shout out to my mentor, Scott Beckstead, of Beckstead and Associates. He trained me, and I got into the industry just because I wanted to get into real estate. I just didn't know where to start. And a client of mine at the time said, you ought to become an appraiser. So I gave it a shot. I went to school, and in '96, I started doing residential appraisals full-time. And as I was just getting started and learning the ropes, I noticed there was a consistency with realtors, and they kept on telling me when I would say the value's not there, they would say, but the buyer wants this. Can you push it $10,000 more? Have you heard that, John? Can't we just get $10,000 more?
On every appraisal I ever did from '98 to 2006.
Yes, they always wanted more.
And now it's different.
More value,
Refinance or not.
and
Or just refinance anything.
Yeah.
and so I felt that was kind of weird and strange, and so I wanted to become a realtor so I could not oversell properties. And yes, I feel that my appraisal background definitely gave me a good start on value and writing my reports.
Yeah, and for me, I'm not an appraisal. An appraisal? I'm not an appraisal either, but I'm not an appraiser. And it's actually a huge benefit to me, to my clients, that I'm married to an appraiser, actually. So I'll talk about value or, suggestions on price point for listing a home, and kind of figuring out where they want to hone in to list. And obviously there's a process from a realtor standpoint on how to come to that list price with a seller. But when I talk to them, and they say, well, what do you think about, listing higher? I will tell them my reasons why I think not. And a lot of times I will drop Kris's name as an appraiser and say, well, actually, my husband's an appraiser, and here's what I know from listening to him. And so I know that, not being an appraiser myself, but being married to one has been helpful. So I can only imagine that your clients feel so much more at ease sometimes, knowing that you have that expertise also in your tool belt. So, okay, so before we get to pre and post 2007, 2008 on appraisals, why do you need an appraisal in the first place?
A couple different reasons. Refinancing for your loan, the lenders require the appraisal for their portfolio.
So you're not overpaying, right? They know
Right.
they're not over lending on a property.
Yeah, it's all about protecting the lender. It's not the appraisal isn't for the buyer or the seller. It really is for, if you're getting a loan, it's for the lender
Yeah.
to secure the property. And even though they want the value to be a certain amount, the lender really is using that to give your loan, like,
As a guarantee.
yes, to feel
Yeah.
good about it. So it's for them. So they are technically the client, not the person technically even paying for it. It's the lender
lender.
is the client. They're the person that gets the information, and they do give it to the buyer, but the buyer's not really the client on it. So you need to get it for any refinance or over a certain value. If you have some lenders, if you have good credit and high loan to value that they can see online, you don't need an appraisal. But
Yeah, loan to value meaning how much you owe on the home versus how much the home is worth,
right,
right?
yeah,
Yeah, so the lender is the one who actually orders the appraisal. So the buyer doesn't order it, the seller doesn't order it. Now there are, private appraisals that a homeowner can order themselves, obviously, and we can talk about that in a minute too. But the lender is ordering the appraisal, and it's for their protection to make sure that they're not over lending on a property, right?
right.
They want to see the condition also. They want to know that they have eyes on the property. Someone's been in it. The bones are good. There's no, the kitchen's still there. Counters are still there. Toilets are still in place. They need to know that. So it's we take interior photos and verify
Yeah.
that everything's there, square footage.
Yeah. So who wouldn't need an appraisal then? A cash buyer.
Cash buyer is not required to get an appraisal. I've had a lot of cash buyers that want to get one, just like I want to make sure that I'm not overpaying, or kind of find out where the value is. Or some people that are selling their houses, they call us like I need to get an appraisal. And I'm like, well, you don't need to. Like, if you have a good agent or someone, like, if your house is a standard typical home, it's really easy for the agent to do if they know how to do it right, show them what the value is worth. But if it's a weird home or big home or something, you need more concrete
really
value,
unique. Yeah.
then maybe it would be beneficial for it, but it's not required. It's more an optional.
Yeah. And in that case, if it was a cash buyer that just wanted it, or a seller that is really wanting to verify how they've honed in on their list price, they can order that themselves, right? A bank at that point, a lender is not ordering that appraisal. That's a private appraisal. And that's, I think, important to understand the difference between who's ordering it, right? There are a lot of times where people will say, well, I've already got an appraisal on this, so the buyer doesn't need to get an appraisal. And that's not the case, right? If the buyer is getting a loan and the seller's already paid for an out-of-pocket appraisal, the bank that is lending on the home for a buyer still needs to order their own separate appraisal.
Correct. Yep. It's required that if a buyer gets an appraisal outside of the lending, it's basically for his use, and they're going to be required to have another one. So.
Yeah. And was that the case before 2007, 2008?
No.
No.
You could actually you could order an appraisal if you're, say you're buying the neighbor's house. You could order an appraisal on the house next door, have the appraisal done, and that buyer could take the appraisal in to the lender, and they would use it. You just have to add their name and just tidy up the information on the property.
Yeah. And you could pick your appraiser right? You could
absolutely.
hand pick. So companies, banks, lenders, builders,
Friends,
buyers, sellers,
neighbors, anyone would just
whoever would
they-
they would hand pick an appraiser
yeah.
to go and do it. And then that was a huge change, right?
And that's how we ran our business. Appraisers had their own business with their own clientele, lenders that exclusively used us.
Because they trusted you.
They trusted you. A quick turnaround. When we started, we'd have to go out and get our own clients, lenders that would just send us our orders, and hustle was the name of the game. And 2-day turnarounds were important to lenders, and that's how I built my business. And I'm sure you did the same.
Yeah, speed was every order you got said rush, rush, rush on it. 3 words, rush, 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 or ASAP. Like we know.
Yeah.
It's always that.
It's always that.
You don't have to put that on there. We know that's the case. But everyone did rush, rush, rush.
Yeah.
And they
Right.
put estimated value. They would put that right on their forms. Like, this is what they're basically saying, we need this value to make the loan work. And it's like, boy, did that change. Like, the trying to manipulate what the value was going to be, like telling you ahead of time. So try and get
Hey,
it.
we need you to push this, like Kris was saying in the beginning, right? Push this up 10,000.
And refinances and stuff, and that's where the problems started coming in. And like the kitchens, you said, like they started adding, I think probably after 2008-ish is when they started adding, you have to have interior photos. Every room,
Yes.
bathrooms, kitchens. First it was like kitchen, bathrooms, and then it was like every room that you're saying is finished, you got to take a photo of it.
And it had to be from a certain angle and showing all the fixtures, and but speaking of pictures, we used to have to do it on 35 millimeter, and it was always just
5mm.
we had to get 3 copies of each print.
This is in the 90s,
And
people.
this was in the 90s
Go to
and
1 hour
early
photo
2000s.
and hurry and get them developed quick.
Developed, and then
tape
we
'em on
tape
there.
them, double back tape. And when digital cameras started coming out in '99, the lenders would actually reject anything that came over a digital form. They
Really?
wanted the film, and just same with electronic signature. They wanted wet ink. They didn't want digital signature.
Some
So
people had
interesting how things
stamps, but they didn't
change.
really like the stamps that much. But you could get a colored stamp, like I was like, and you had to deliver them all. Like, technology really sped it up,
Yeah.
helped us, like, because that's why the price stayed the same. It was like $300 for an appraisal for years, or $350 for an FHA,
Sorry.
or $250.
$250 when I first started out.
Oh, $300 for me. So
Oh, listen, he was getting a deal.
Yeah.
His lenders were getting a deal.
And
with
you had to
Kris.
deliver 3 different copies,
yeah, one for the lender, one for the homeowner, one for the
one for the underwriter.
yeah.
Interesting. So people could choose their appraiser. It was based on a lot of things, obviously trust, speed, all of those things, details, probably your ability or willingness, I would say, appraiser to appraiser, to bump that value as they needed it or didn't. Like, I bet that was a certain thing, or maybe some lenders appreciated more the appraisers who would push back, right, when somebody wanted to bump it up. So that happens. Then 2007, 2008 happens. The financial crisis happens with all the lending and foreclosures and short sales and all of those things. Now it's completely different on the appraisal side. So you cannot now choose your own appraiser. You can if it is a private appraisal, right? A cash buyer, like we were talking about before, a seller. But as far as someone lending on an appraised home, a bank lending, on an appraised home, it now goes through what's called an AMC, right?
Right.
So a lender puts into that program, hey, I need an appraisal on this home. It goes out to a whole slew of appraisers, and then one random appraiser picks it up, right, and says, I'm willing to do this one. Is that how that
Right.
happens?
So we both built our businesses from '96. My first client was, I went to Morgan, first appraisal client that I ever got. Dan Davidson, he's still out there lending. Hey, Dan, with Prime Lending. He gave me my first shot. I went to Morgan, and I did a 1-day turnaround. So
Morgan, Utah.
Morgan, Utah is about about an hour drive one way. Took comps, came back, delivered 3 sets, and next thing I know, I was getting all of his work. And so we both built businesses all through 96 on up to 2007 when we had the mortgage crisis. And my company, I started a company, it was called First Choice Appraisals, and had 4 appraisers with me. We were doing 210 appraisals a month.
Oh my gosh.
And
a lot of appraisals.
we were working 17-hour days. And then 2007 came, and like the appraisal orders, the fax machines stopped. And we started hearing rumblings that, all these loans were going into default, and everything was, our world as appraisers were tailspinning. And next thing we know, we had to get our list on, our names on list for AMCs. And this was all foreign to me, and I didn't think I needed it. I mean, I was doing all these appraisals, and I went from 210 appraisals down to less than 35 a month.
Gosh.
And that was started in 2007, right?
Yeah, it was kind of a scary time. Like 'cause you didn't know what. Like, we built all these relationships, built all these clients, and then like now they're useless, kind of. And it was tough for a few years, and the price per appraisal, like, they didn't charge much more for appraisals because AMC took a big cut. So then the appraiser took even less, but we were desperate for work, so we were doing it for less, letting the AMC take their cut.
Well, that was the only way to get an appraisal.
And
right?
it was,
So it was about $350 then. What we were charging was $350 an appraisal, and then now the AMCs come in, and they were taking a $100 fee off of that $350, and we were getting $250.
yeah, it stayed at like $350, or some were even taking more than that.
Some were
I mean,
taking more.
It's America, make as much as you can, and make the appraiser eat.
Well, and now there has to be that middleman, right? So they're capitalizing on the
Yeah.
fact that this is now going to be a revenue stream for them, right? Being able to take that chunk of each appraisal.
And looking
Yeah.
back on it, I honestly believe for our industry, it was probably the right thing to do. Like, it got rid of a lot of fraud. It got rid of a lot of like miscommunication with agents, lenders, appraisers, all of them. Like, there was a lot of people that did.
In cahoots with each other,
Yeah.
talking.
And I mean, as an appraiser, it stabilized me because there was so many lenders that if their refinance or their purchase didn't go through, they didn't want to pay for the appraisal. Like, they did the loan and then the loan failed, but they already had the appraiser. They didn't want to pay for it. So, because you didn't pay up front, you paid at closing, they would mail you a check or whatever. But
And now it's different. Now you get
Yeah,
paid
when
upfront.
this happened and this started taking place, we had about $70,000 in invoices that went unpaid. The lenders just walked from it. We tried to collect it. We walked from all kinds of money because you usually got paid after the appraisal was submitted and the deal closed.
Closed out, yeah.
But to go along with what John was saying, I think it was a good thing, but I also think it could have been structured a little differently. But some of the things we had to deal with, like I'd have clients that would say, I need this value. And when I'd go and we used to do what they call comp searches, or not even comp, drive-bys. And, I couldn't get the value. And I had someone say, well,
Somebody
you're
else
not
got
a
it.
team player. We're not going to use you.
we'll
So
send it to this other guy who'll get the value.
basically,
Right.
they would stop sending you work.
He's in jail now, by the way.
Yeah, he's in jail. He would just stop sending you work. Or if you'd turn in a report after doing 6 hours worth of work on it and it was undervalued, they would say, sorry, we had to send it out to someone else. These were lenders doing it.
You've already done the work, but it didn't come back in the value that they wanted.
The value is not what we needed. We sent it out to another appraiser. He said he could get the value.
Yeah, that's nuts. And honestly, it shows you why everything happened the way that it did in the financial crisis, right?
Yeah.
People tweaking numbers to make it work. And then next thing you know, they're lending more money than it's worth. And, all of those things, stated income. I mean, there were so many things that caused, right, that financial crisis, and all of the changes. And I do agree with you. I think a lot of those changes are wonderful and have actually on the back end helped, especially, for the security of lenders, but also for homeowners, right? Like, then this is actually the value of the house, right? And you don't have.
I'm not upside down on it.
Yeah.
Right.
Yeah. I'm not upside down on it. And so
there was a ton of pressure. There was a ton of pressure on the appraisers to get. I mean, we had
on lenders too, like
on lenders as well.
Like
you had agents calling you and telling you how stupid you were, and I'm like, okay, well, send me a comp. Tell me what show me what I'm missing. Send me something that I can use that I can get through underwriting. And so, for example, I can remember like it was yesterday. An agent called me and he was mad, and this property was in Magna, and I'm like, a brand new construction. It was a Rambler, 2-car garage, and I was $10,000 short on value.
That was a lot back then.
Which was a lot back then.
Yeah.
And
people still think it's a lot now.
And I'm
right?
like, and he called and he says, "You're overlooking something." I'm like, "Okay, sir, give me something to use. Show me what I'm doing wrong."
Mm-hmm.
And because I knew I wasn't wrong, and he sent me comps, the same style Rambler built by the same builder in West Jordan.
Totally different area.
Totally different area, 4 miles away. He said, "You can use these." And I'm like, I'm looking at the contract, and it shows, I see that you're representing both sides of the deal. Why don't you cut your commission? Because I'm not bringing the value in.
I'm sure he didn't.
And
like that.
he didn't like me, and he had some choice words. But
and now the rules are you can't even talk to an appraiser, right? Like a lender can't call an appraiser and say, "Hey, this is where I needed this to be. You didn't." Right? Like there are there are rules now. There's a line there.
They don't know who the appraiser is.
Yeah.
Up front, they won't know until when it's done. They can probably see the name, but they don't know who it is.
And as a realtor, I have had a lot of transactions where value has come in, where we're under contract, no issues. But I have had a handful of contracts where the value has come in lower than what we were under contract for. And at that point, it's now you're renegotiating a contract because the buyer can't get lending on that home for what you were under contract for. And some of the times we've done what's called a reconsideration, right? Where you can say, hey, the comps that are on this appraisal are not the best or most recent comps. Here is what I think, the appraiser was missing. We would submit for that. And twice I have had it come back where the appraisal did end up getting bumped up in value. But that is very few and far between. I think that happens. And more often than not, I mean, you guys as appraisers know more specifically about value than we do as agents, even though I feel like I do a really good job honing in, value, running comparables and scenarios and analyzing, all of those things for my clients. I'm not an appraiser. There's 720 ticks on an appraisal, right? That you have to
over
look
700,
at.
yeah.
Yeah. So, a lot goes into it. So when you go in and you do an appraisal, let's switch gears for a second. What are you looking at? You measure the house, right? What else? You do interior photos. One of the biggest complaints we hear about appraisers is they were only at my house for 15 minutes. Like they think it's an inspection, right? A home inspector goes in for 4 hours and looks at every nook and cranny of the house. Appraisers do not. So why do you not do that? What do you need in order to get the information that you need for an appraisal?
Well, one, you hear that a lot. Like, oh, that was fast. But one, if you have enough experience, you standard home, you know what this home is about. You're looking for certain things like defects, or you're looking for upgrades, but you can tell just by the photos and experience and you're measuring it. Like you already kind of know, have a feel for the house.
You're measuring it to verify the square footage.
Yeah, we're not. experts in foundation or settlement, or if there's some major structural issue, we're not going to notice it because we don't get into the. That's where you home.
behind the drywall.
Just note
right?
that in the report that
But
the
you do note
lender may
condition.
want.
Yeah,
right?
definitely.
You rate it based on condition.
Yep, you definitely rate condition. It's based location. Location is number one. Like they always say, location, and that's where your comps are based on. People want back. I have it recently, but they want you to ignore the stuff right in your neighborhood that sold, to go out a few neighborhoods to find
or other cities.
It's like, why would I ignore these sales right in your neighborhood that are really similar to get these other ones? And the fact is they want a higher value.
Right.
Or a lower value if, depending on what the situation is.
I feel like also consumers don't realize that you have to base your appraisal on sold homes. So they will say, well, my neighbor is listed for this, right? But that's not what you're using, right?
They don't always see that sold because they don't have access to see what it sold for. They see what it was listed for.
Yeah.
And
they heard.
Closing costs or...
We heard that it sold for this.
We heard that it sold for that, yeah. And Utah's a non-disclosure state, right? So you have certain sources that you can go and figure out where a house sold for a certain price, right? But and usually that's the MLS, right? Is you're going to and you're verifying.
That's the best source we have.
Yeah, on the MLS, a sold comparable close by, and so you're using those for the value that they sold at and then you make adjustments, right? Based on.
Right. And then we look at the style. I mean, you're not going to compare a 2-story style home to a Rambler, or a split entry. You're going to compare three Ramblers to 3 Ramblers, same square footage. And kind of the guide I've always used is I go 200 square feet larger, 200 square feet smaller, or if we can find them within 100 square feet, when I'm doing the comparison on the gross living area, GLA, that's the main level.
Above grade.
Above grade.
Yeah.
And then the basement. And then we try to match up acreage, site size, and, compare, if there are homes with basement kitchens, then I like to provide at least 1 or 2 with basement kitchens. That way I've addressed how that home is viewed in the market.
Yeah.
Like if someone needs a mother-in-law apartment, or they have college kids or married kids and they want separate entrances, those homes tend to sell for maybe a little bit more. And so I try to find comparables that have that instead of just making an adjustment, or not even making an adjustment for a kitchen.
Yeah. Or it's a full ADU, right, that they are renting out to tenants, right? And now that is bringing in income or whatever it happens to be. I know all those things are adjustments for you guys. But yeah, I mean, it's based off of sold, location, all of those things. And then when you put together your appraisal, you are making additions or subtractions, right? Adjustments based on how it
upgrade
compares.
size, garages.
Yes.
Finished basements or not.
Yeah.
Outbuildings.
People always ask, well, what's the standard? Like, well, there's not always a standard, like a view lot. There's not always a standard garage adjustment because it depends on the location. Some areas that has big lots, bigger garages, they're worth more per garage stall than in a lesser area.
Yeah.
So there's not really a standard. But to back up a little bit, like appraisers, it's okay if agents realize appraisers make mistakes, right? Like I have an example of a house in Sandy that sold. It was been a while, but it was just a standard house, nothing fancy, nothing junky, and it was like, I think it was like $345 was the purchase price, and I accidentally.
This must have been a while ago. $345.
Yeah, it was a while ago, but I won't forget it because it caused problems, and I accidentally typed. My value was. I hit a 2 or something, or the wrong number, and I didn't even realize it. So it was like 20 or 30,000 below the purchase price. I think it was 20,000, whatever, 20,000 below the purchase price, and I was going to be the value that I was thinking was going to be about 5,000 above the purchase price. Anyways, the listing agent was like talking to them. They're like, well, there's nothing we can do. And they were going to lower their price to my appraisal to basically it was a bad appraisal. It wasn't legit. And then they called me. Someone called them, and I was like, looked at it, and I was like, oh, that's was a legit typo. But they were all going to negotiate a lower price. So now the buyers were kind of upset, like, oh, now you're going to change the value? I was like, legitimately, I accidentally typed the wrong number in. But if they didn't contact me,
You wouldn't have
they
known.
probably would have lowered their price. And then the sellers were out this money. They probably could have sued me. And the buyers would have been like, yeah, we just ripped him off.
Yeah.
But it was a legitimate, like, it's okay to, like, in that case, like, the agent should just somehow contact, like, is this correct? Like, I'm not trying to
Yeah, well,
argue
and
with you, but
and sometimes it's obvious that there was a mistake, right? It seems so far off from what they thought.
well, this one that I thought that Chris probably would have thought, like, oh, this is like, why is he coming in at this price? But they were like, I guess, didn't understand it and didn't read it right. And so they just thought, okay, that's the value. And like, I guess we have to lower it.
And it kind of depends on what the market was doing at that time too, that they would even miss that.
Maybe they didn't have any other buyers and they were like,
Yeah.
oh, well, but
Yeah,
I mean, we all make mistakes. I mean, probably the most common thing I ever get called on is square footage difference, you know, and oftentimes sellers or homeowners think that if you're in a 2-story and you have a steep pitch and they have all this storage space that is floor space, but you can't stand up in it. We don't measure that as square footage. And I mean, I've had agents and sellers call me and they're mad because I'm like 300-400 square feet smaller.
because it's finished.
Because it's finished, and I have to explain to them that I don't measure anything under 5 feet, and you should have an 8-foot to 7-foot ceiling. So if I can't stand up in it, then I'm not going to include that as livable area.
Yeah,
And over by the ball, what was the Smithfield, the baseball over on field on 1300 South, and what is the name of that ballpark? Anyway,
I think
I
it's
don't-
Miss.
it's Smithfield Ballpark or something. Anyway, sorry. There was a house, and I went in to appraise it, and they told me it was a bungalow with a full basement, kitchen, everything. And I measured the outside, walked through the first main floor, went downstairs, and I couldn't even stand up. I'm like, had my head down like this. There was a kitchen,
well, and you're not
a
7 feet
full
tall.
bathroom, and bedrooms down there. And I called the lender, and I'm like, we can't give value for this. I can't even stand up in it.
Yeah,
And these kids were running around, just
but they
having a
think
good
it's a
time.
finished basement.
But they
that's
thought it
livable
was
because kids are down there,
well,
right?
no, there was an adult man down there too,
Oh,
and they wanted me to give it full value.
probably had a sore neck all the time bending
So,
over.
But
Bending
it's
over. But
the
the other thing
craziest
is
house
also,
I've ever seen.
even in a full height basement, you don't give the same value per square foot in a finished basement that you do on the main level, correct? On an appraisal?
Right. Basements are typically they are worth less than above grade because it's what the market pays. The market
Right.
doesn't want to pay for basement square footage compared to above grade square footage.
Right. So, I mean, even if you were building a house, right, the per square foot price to build that house is going to be higher on the main level than to finish a basement. It's cheaper to finish a basement than it is on the main level of the house, right? So, same thing, that's reflected on the value. So, okay, let's switch gears about other things that add value or not. And you hear all the time the value of something is what someone's willing to pay for it. And yes, that is true. We saw that particularly in COVID times, right? Where people were willing to pay above appraised value. So you would have an addendum in a contract that would say buyer willing to pay up to $30,000 over appraised value. And they would have to say that in order to offer a certain price, and the listing agent would know, like, hey, I put this list price based on comparables that have recently sold, and this is not going to appraise for this. So I can't feel good about accepting this offer or telling my seller to accept this offer from you, knowing that if you're getting lending, you're not going to be able to get lending at that purchase price, right? So they'd have to kind of jimmy rig the offer and do different things and say they'd be willing to pay extra in cash. And that was such an interesting time to have people buying homes above the appraised value willingly. They were doing that because there was such low inventory and so many buyers with the interest rates being low that you would just have, this buyer frenzy, and they would just throw money at the sellers to get them to choose them in multiple offer situations. But let's say in a normal market, neutral market, you have a lot of people who I think over improve their homes because they enjoy that particular aspect of their home, right? They are customizing their home to their needs, to their wants, but sometimes that costs a lot of money and they get upset when that doesn't translate over in value on an appraisal, right? So someone would say like, hey, I just spent $50,000 on a basement kitchen. How come you're not bumping up my value $50,000? Well, dollars doesn't necessarily mean value in the sale of a home, right? So I'd be interested to hear both of you tell me what you feel like maybe your top 3 things that you see on a home that you're appraising where somebody thinks that they're going to capitalize on all their dollars that they put in, but it doesn't necessarily add that much value, equal value. Like a pool costs how much to put in?
100,000.
100,000,
Or more.
150,000.
Yeah.
That's just a
basic
pool now.
So 100,000, 150,000, sometimes $200,000. But is a pool on an appraisal adding $200,000 in value?
Well, I think it's when we're talking about pools nowadays, pools are typical in the area now. 10 years ago,
Getting a lot
15
more,
years
yeah.
ago, they were not typical. And I did an appraisal up in North Ogden. And I remember the guy paid $50,000 for a pool, and it was a negative on that home because of
Most
the
people
insurance.
didn't want it. Oh, the insurance.
It was the insurance. And so I actually did a negative adjustment on the fact that he had a pool.
Interesting.
And
He was probably happy.
oh, he was thrilled. He was thrilled. So, but swimming pool, I think in Utah now is
Doing a lot better.
doing a
Yeah,
lot
there's
better.
more demand, supply and demand. There's more demand for it than
Yeah,
there
people
ever
like
used
it
to be.
now.
But there's some things you can add so many things to a home, right? Like, and people are like, I just spent $10,000 on my windows. Like they might cost more now, but I remember people told me that a lot. I just spent $10,000. I was like, okay, your old windows were worth something. If you had 0 windows in your house, it was just air blowing through there. That's a problem. So if you put junky windows in, at least you have windows, and they're junky, but they're windows, and there's not air blowing through your house, right?
Right.
So now you remove the junky windows, you just threw away value, right? You're just taking it. If you have an old kitchen, but it's functional, it's just maybe it's in the 70s and looks old. But like my mom's house, not that there's anything wrong with my mom's house. Her kitchen is old, but it's functional and works, right? If we go there and remodel it, throw all her cabinets away, we just destroyed
Value.
huge value, a kitchen. You just threw it in the garbage. And then you covered it up with a brand new kitchen, which might cost
replaced some value.
a lot of value, but not, you're throwing away value when you tear things out. Like if it's not, now if there was no kitchen there, fine, you put the new kitchen on top, you're adding a lot. But when you're throwing away value and then adding better value, you do get a higher value, but not dollar
But
for
you're
dollar
not-
for what you.
Yeah, not dollar for dollar. That makes sense. I've never thought about it that way, right? And just for sake of numbers, let's say you take $5,000 worth of kitchen out, and then you put $20,000 worth of kitchen in. You've really only put $15,000 worth
Right,
of kitchen in,
yeah.
right? Because 5,000 of that made it back to zero, right? Back to neutral.
Yeah,
of
you
what
went
it was.
negative before you went positive.
That's so interesting. I've never thought about that.
So
but-
that just shows you how and why appraisers are so important to banks and lenders, because we take that emotion out of from the homeowner, saying that, and see things on a neutral from a neutral opinion and eye.
Yeah.
So when we give a value, we've determined all of that, and we've kind of like dumbed it down and made it on a level playing field.
Yeah.
To come up with that value. I had a home that I built a shop on, and I can understand why people would get mad at appraisers for undervaluing a property or
Appraising it correctly, not necessarily undervalue.
undervaluing
That's right.
improvement is what I meant to say. So I built a shop. It cost me $75,000. Needed an appraisal for a refi. The appraiser came in, gave me $20,000 worth of value for that
For the
three-car detached garage.
$75,000 detached
And I'm
shop.
like, you know what? For the first time, I knew what it felt like to
Things
have that
come full
happen
circle.
to me. And I'm like, okay, I get it now. But at the same time, I knew the appraiser, and I knew he did it, a good job. And that's how the market reacted to my shop.
Yeah. Well, and same thing, back to the pool. Nobody's getting a $200,000 uptick on their value for a pool. They'll get some uptick, but probably not $200,000, right?
Right.
Correct.
So, yeah, it's just so interesting. So let's talk about a big one is, I think, solar panels. So as an agent, I'll show up to somebody's home that wants to list, and they say, well, I have $40,000 worth of solar panels on my roof. And my first question is that system paid off, or are you still making payments on it? Because if they put $40,000 of a loan essentially on their house, and then we get to closing, is the buyer going to assume that loan and start making payments now? Or is the seller going to pay off out of their net proceeds? They're going to pay off that loan. That's part of that negotiation, right? A buyer doesn't want to buy a house that they already are getting a loan on, and then now they have an additional loan, right, for solar panels. Are solar panels beneficial? Yes, if you want solar panels, right? They are, and some people do value them from an owner standpoint. I want to save on my power bill. I think there's a lot of benefit to solar. But as far as financial benefit on an appraisal, you're not going to bump up their appraisal $40,000 because they have $40,000 worth of solar panels on their house, correct?
Well, if
And they think
if
you
the
are.
market shows that it's worth 40,000, then we'll adjust to 40,000.
Right.
But typically, what I've seen is it's never worth that much. And I have solar panels on my house, and so I can tell people that, like, hey, I spent $26,000 on mine. I got a rebate on part of it because of the government rebates, but I know it doesn't add, and that doesn't even net me out on my power. I still have a power bill, but
But you like having them on your house.
You see a benefit.
You see a benefit.
so yeah, I do see a benefit, but I don't know if it. I honestly, I'm not sure it was worth it. Long term, maybe long term it probably is, and we'll see in the future. But like short term, and all this is pretty new, so
Yeah.
you're banking on long term, which with everything, if you build a pool, you redo your kitchen, you put some fancy landscaping in that you love, your family loves this.
You're enjoying it while you own the home.
And my wife's grandparents, they always talked about putting in an addition on their home, and I knew they were never going to leave. And I'm like, additions are not worth what it costs. Like if you're just going to sell the house or move in 2 years, it's not worth it. But they were never going to move, so they put this addition on, just a big family room, redid their kitchen, and that was probably 20
And they love
years
it.
ago. Yeah, and it's worth it for them to use and to have to enjoy, but realizing it might not add, if you're going to sell your house really quick, it's not going to add your value. If you're going to live long term, you want to enjoy it. It's like buying a car. You know it's going to decrease in value, but you're going to enjoy it. If you're going to live there a long time, it's okay. It doesn't matter. Like, enjoy it, use it, love it. Realize maybe it wasn't worth it if I'm going to move in 2 years.
Right.
I'm going to take a loss.
I guess what's the motivation of why you're doing something, right? Are you doing something because this is how you're going to most enjoy your home while you live there? Then great, if that's worth it to you.
One of the main, sorry, I didn't mean to cut you off,
No, you're
but
good.
one of the main things I always hear on, say, for solar, the salesman coming to your door upsells you on everything. and they're going to tell you that it's going to improve the value of your home. And they lead you
Which
to
it does improve the value.
but they don't tell you how. They almost, from the people that I've talked to, and I have a listing coming up that this happened to this gentleman. They don't tell you. They lead you to believe that it's going to improve your value
By that full
by
price.
that full price.
Yeah.
And when I actually sat down with this client and showed him, in actual numbers, just adjusting my numbers, I said the most I can give you for this is $10,000 of value on your list price. So he was told that he should list his property for $450. I'm saying we should list it for $460 because we're including the solar.
Yeah.
And agents.
So you are bumping up value, but not
because I could actually show that there was value on another cell that had 23 panels, and we had 27 panels. So I actually call listing agents that have solar and see how many panels they have. Like I've had a home that I appraised that had 40 something panels plus battery backups. And I've called on the listing agents and asked them how many solar panels and did you have battery backups, and got that information, and I used that to make an adjustment on value, because it will show up, but we have to have homes that have sold that have solar and similar number of panels, and you can actually come up with a value then.
Yeah.
So there was I looked into the solar guys when they came, and they were telling me about the value, and I was like, I know this doesn't increase my value like this. And he was telling me how much it's going to go, and I told him I'm an appraiser too, and I see this. And so we went through where they come up with their figures, and it was based on a big study that was done in California, but it was off. I was like, okay, that's California, where there's more sun in Southern California, San Diego, I think. Not sure, but somewhere Southern California, where they should more sun, more demand for the solar, and so increase their, according to their study, it increased their value quite a bit more. And I was like, it's just not quite the same here, but there wasn't a study done here. It was based off of
and to
the
your
good
point
study for them.
before about pools. I mean, years ago when you appraised that home that had that pool, that was a negative, right? Now it's shifted where consumers do want pools a lot of time. There's a lot more, there are a lot more, people who have pools. It's much more normal now in Utah than it was then. So maybe it will get to the point where here in Utah, solar panels are much more, desired, and everybody is willing to pay more for them like they were during that study in Southern California, right?
Trends change.
Yeah, trends change for sure. So interesting to watch. But I do think as a consumer, really important to understand that just because something costs you a certain amount doesn't mean that is what is adding to your...
It's the same thing with a big house. You could have you want a house that's typical for your neighborhood. You really don't. The city's not going to allow you to put a manufactured home in this neighborhood when all the homes are not that. They have certain standards and try to keep things conforming.
Yeah.
But so if you have a giant house in a like an average neighborhood, you think you got a great deal because it's less than what you would have paid if you were up, in Mill Creek or something. But if you look 50 years ago, Mill Creek had all these smaller homes, but now the trend's changed where people will buy those old homes, bulldoze them, and put a big house up, and then that's okay.
Yeah.
So trends change, but that's, if you would have done that years ago, they would have been like, what are you doing building this big giant home in this neighborhood?
And then you had to go way far away to find a new construction to compare it to, and then your underwriters would
ask you
This is
why.
overbuilt.
ask you why and ask if it's overbuilt, but there are other homes that never saw the market. So, we'd have to drive the neighborhoods. I think it's important, John, you could maybe see if you agree with this. If you're making major changes in your home, whether it's structural or improvements with solar, kitchens, have an appraiser come and do an appraisal for $500 or whatever the fee that the appraiser's charging, and you can do it as if those repairs were made, a prospective appraisal or
an estimated appraisal,
or,
I guess,
just,
right?
Yeah.
Because nobody's lending
Subject to
on
what
it
it was
that
going to be
much.
like.
Yeah, subject to.
or just even talk to an appraiser. Just take the time to talk to an appraiser and see what type of value it's going to add in your home.
Yeah.
Now you got to make sure that
value.
your marriage is strong, because usually one person wants to do something, one person doesn't. So you're coming in there as the appraiser, like someone's going to be like, we shouldn't do this. Or
You
we
get the
should.
stink eye from one of the couples, the wife usually, but
What? Yeah, that's funny. No, I do think actually I mean, to pump myself up as a needed phone call from consumers as a realtor, not just you guys as appraisers, but I do think it's super important before you do something to your house to get information about it, right? Whether it's an appraisal or you call a realtor and say, hey, what are you seeing in the marketplace? How does the market respond to, this type of addition on a home, or, is it a positive or a negative? That show, what was it called? Who Wants to Be a Millionaire? Where it was like you could phone a friend. I always wish that clients would phone a friend. I'm like, please phone a friend before you do something. This is a huge purchase or a huge addition to your home or whatever it is. Like, call someone that you know, call a realtor that you trust, call an appraiser that you know. Like, we want to answer your questions, and there are no dumb questions. And there are people who, more often than not, their response is, well, I didn't know. I didn't know that this was not going to add value, or I didn't know that this was going to hurt my value, because some additions do, right? When you do something to your home, it does hurt your value, but it costs them money. And so I think it's so important for them to just pick up the phone and call, and you don't have to be ready to buy or sell. We'll just answer your questions, so that way you are making an informed decision instead of feeling like you did something and then, you end up regretting it, right? And maybe based on our opinion, you do it anyway, but at least going into it. And so you're not on the backside saying, I didn't know,
That's why it's so important to when you sell your house, buy your house, everyone thinks the values just go up. Values just go up. You can't go wrong in real estate, and mostly you're going to be okay. But there's a lot of people that can do themselves damage on this big investment and an inheritance and like all these things that you're building. And if you do something wrong, if you don't have an agent, you don't have appraisers, or like really trying to help you out on when the cases that do go bad, it can really hurt you. So that's why it's important to use an agent who is an appraiser.
That's right.
And then
And I had my appraiser hat on, but that's right. An agent we could tell you what and how the market would react to big changes in your home.
Yeah, if they're speaking truthfully, not like trying to make their commission, like let's give you some honest feedback on this, where this is going to lead you in the future before you do it, So
yeah. Anything else you feel like they need to know about appraisals and how
people always ask, what do I need to do before you come? And really, there's nothing. Like even cleaning your house doesn't matter for now.
Plant new plants. Like I see people doing crazy things before an
like
appraisal.
they're trying to get a show ready for.
Yes.
I'm not buying your house. Like I mean, we are human, but you do your best to. We have to look at it as though it's vacant. If you have really nice furniture or if you have junky furniture, that doesn't matter to the house, because you're turning that, or you're going to remove that when you move.
Right.
We look at it as past the debris or the personal items that are scattered throughout the house.
Well, and like you said, Kris, the emotion is taken out of it for you, right? It's a level playing field. So you're just going in and just looking at it like this is just bones of a house.
Now, if you have damage, then you might want to, like, the lender's not going to lend on it, especially if it's above grade and you have repairs. The lender's going to make you. We have to take photos, so
Yeah.
I can't hide a missing tub and toilet.
Broken toilet and
But in the basement, you can have it unfinished. It's okay to be unfinished.
Yeah.
But upstairs, you've got to,
Yeah.
that's what you could do. You don't have to clean it, but if you have damage, you might want to wait. Just fix that little bit of damage before you get your loan.
I had a funny story that I think's funny because I went into this home and the lady said, "I'm sorry, I've been sick," and we all go through sickness, and she said, "I would have picked up, but I just didn't have time." And I walked in,
15 years worth of junk.
there was clothes everywhere in piles, and I remember walking around the bed and there were cobwebs on the clothes in the corner of the bedroom.
Maybe she's been
And I
sick for a
looked
long
down because I heard a noise, and there was a fresh batch of kittens on some clothes. And I remember walking out, and I said, "You have kittens back there?" She said, "Oh, did she deliver?"
Oh my!
And I'm just like, "Yeah, they're back there on your clothes." And I mean, we hear all kinds of excuses, but
you don't need to plant flowers.
We
but
look
maybe
past,
get rid of the cobwebs.
We
and
look past the
fresh kittens.
cobwebs and the different things and see the cabinets the way they are, that they're hanging. They're there.
Yeah,
It was a crazy story. So
Oh my gosh.
If you do have an infestation of spiders, you might want to take care of that.
that's true.
Well, at some point, what's the condition, right? When you're rating on condition, it's not mess, it's condition of the house, right?
Right.
But sometimes that mess can influence.
It could cause,
right. It can cause.
depending on what it is. Yeah.
Yes, cause some issues. If it's the mess is also mixed in with deferred maintenance, right? You're like, okay, no one's been maintaining this, and there's water damage or whatever it happens to be. That's different, but that's interesting that everybody wants to clean up and put new things in for the appraisal to make sure they add their value.
What
That's
can I
very
up
funny.
my value with? Well, finish your basement, throw in a detached garage before I get there, like add some square footage, whatever you want to do.
Yeah, that's right.
Cookies.
Yeah, that's
Pick your house up and bring it to a different neighborhood.
Oh,
Maybe it'd be worth more.
Absolutely.
all from the mouth of an appraiser and an agent, right? Two of the best appraisers and agents out there, right?
The best.
The absolute best. No, you guys are awesome. Thanks for being here. Thanks for listening. Let us know if you guys have any questions. If there's anything else that we can answer for you, pop it in the chat and we will get you home and answer your questions. Thanks so much.
Bye-bye.
That was it. You did so good. We hope you enjoyed listening to this episode of the X Factor Real Estate Podcast. Thanks so much for being here and listening. It's been a pleasure making this podcast for you. And as always, if you have any questions, don't hesitate to reach out to us. Drop something in the chat. Let us know what you're interested in hearing about in the real estate world. I'm Teri Hudson, and I hope you join us for our next episode.